It will not be a simple case of quarterly earnings and revenue beats that propel stocks, according to our chief equity strategist and economist, John Blank. And he joins us now to fill in the blanks of that statement. John, will future Fed rate cuts be another motivating factor for stocks?
Well, there's two camps of thinking on the Federal Reserve Open Market Committee, Terry. One is, a group of 7 people that have, the right to make a decision, and they are at the point where they think there's no more rate cuts that should play out the rest of this year because of the high 3% core inflation rate the United States economy is experiencing. The majority, though, outside of that, the other 9 are basically thinking, yes, there will be 2 cuts. So in light of the division in the Federal Open Market Committee, I think the market will wait and see and can price in the liquidity when it sees it, but we got to wait for it to see it because of that division.
Any other motivating factors for stocks that we need to be aware of?
Well, the downside motivating factor is we're at a 25, current price earnings ratio on the S&P 500 large cap index, and that is extremely high historically. And it suggests that, basically all the good news is priced in. We're basically priced for perfection, and we're priced for this liquidity. So that's the real issue is if the market's gotten ahead of itself.
You've written that bullish traders are looking ahead years, not just months, to gauge market direction. Are these the fundamental factors that they're going to be watching, just what we've been talking about here?
That is absolutely the case right now, Terry. Every time you look at a Zacks fair value chart for a major stock, above $5 billion in market cap, a large cap stock, they're all pricing fair value out to 2027. So this is a market that believes the AI boom is going to go on for at least the next 2 years, and they're pricing all of it in and expecting even more to come, as their estimates get revised upward.
What about the weaker trader hands? Are they going to be watching anything different?
The weaker trader hands are going to watch for the Supreme Court tariff decision, and they're going to watch for any downside indicators that express themselves in the labor market. If we get a big job loss in the fall here, that would be very negative for the stock market.
You've also written that of particular note is the fact that 9 out of the 16 Zacks sectors show 0 or negative EPS growth in the Q3 2025. Why is that notable?
It tells you that the fundamentals that are holding this market up are located in the Mag 7 mega caps in the tech sector, broadly speaking. And outside of that, Terry, there's a 2% annualized growth rate for the third quarter. So the problem you have here is if there's no broadening in the strength of the fundamentals in this market, can the market itself continue to go up on a thin set of catalysts?
We finally seen a resumption of U.S. monetary easing after a 9-month pause with the quarter-point rate cut last week. Is that going to help investors shrug off any doubts they may have had about stocks continuing to move higher?
I don't think so, Terry, but I think people also got to keep in mind the ECB, which is a major, central bank, the major one for Europe, has already cut 200 basis points in advance of the Fed. So if you're worried about leads and lags in monetary policy, you need to factor in that the ECB has already been cutting quite substantially for a good year.
Tech stocks had an initial positive reaction to that Fed rate cut. Was that just a knee-jerk reaction, or is that going to show some carry-through for a while?
That just speaks to the fact that this market is convinced that, we're going up in a straight line on momentum trading with tech stocks being that strong fundamental area, and it's just, it's holding queuing to that line until it sees otherwise, Terry. And so it's just what's been working and people are playing it.
There's some talk that a rate cut or the rate cut that we saw is going to spark activity in the IPO market. What do you think?
I think IPOs are already getting a little juiced up because of the high stock prices. So I think it's mainly a matter that, yes, the market's getting a sense that now is the time because the liquidity is at a maximum or close to it, given the prices that it's supporting. So I think there is a positive urge to get an IPO out right now.
All right, 2 major U.S. tech stocks and 1 major mainland China stock that you're watching include Tenet Healthcare, Shark Ninja, and Evercore.
Yeah, Tenet Healthcare carries a Zacks number 2 rank with an A for value and a B for growth. You don't often see that. these days, but this is a stock that's in the medical care space. It's one of the largest investor-owned healthcare services company out there. It does basically operate hospitals. So if you like a stock that has strong, employment fundamentals and is likely to hold up pretty well, and you only get a 13 PE, I would like, from a growth at a reasonable price perspective, to buy Tenet Healthcare.
What about Shark Ninja?
Shark Ninja has been a real darling stock since it IPO'd back in 2023. It's based in Massachusetts, and we're at $107 a share, Terry. We got a $126 price target as the number one ranked stock. This stock is basically in this product design and technology for lifestyle solutions. So if you want a really fancy vacuum cleaner or something for your kitchen, Shark Ninja is the place to go. It looks, again, this is one of those stocks that's pricing in the fair value out to 2027. So you have to consider that Shark Ninja is basically fully priced and richly priced at this point in time. And we do got, however, just a 21 PE because they are expecting earnings growth of 15% annually.
And finally, Evercore.
Evercore, I threw out there, Terry, because we've had so much. You talked about the IPO earlier. This is one of those companies that benefits from that. We got a target price of $390 a share, and it's trading at $340 now, Terry. We got a number one rank and an A for growth, and we got really nice upside revisions for next year and this year. It's really run super strong this year. It's up 23%, while the S&P's up 13%. So it may be the case this one's going to get distributed and sold now after a big run up. But you should know that basically this is one of those companies that really is the benefactor, at least from a fundamental perspective, from all these strong stock markets.
Our chief equity strategist and economist, John Blank, on what may propel stocks. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.